Hey, hi. Once again, I'm back, Kaushik Chatterjee. In this video, we are going to discuss a very important discussion, and that is all about somebody is already having a life insurance policy, and maybe somebody from the life insurance industry. They will be knowing like this concept, and this is all about paying in one premium throughout like life, throughout my tenure, throughout my term. But I'm going to get an increasing even life coverage. Very interesting, right? So let me tell you, this only possible when you have a life insurance policy. So let's say today different company, even different plans are available. But yes, this only possible when you are actually choosing those kind of plans, those kind of policies. And let's say, let me tell you in simple. So today, let's say if I'm going to purchase, let's say any kind of life insurance policy. So the biggest advantage for the life insurance policy is like you are going to pay the premium based on your current age. Now let's say I'm just giving an example. How it works. Let me understand first this. So today, let's say my age is 30, my age is 40, 50, whatever, or maybe below that. So I'm just taking a standard even example. So today, age of 30, what exactly I'm going to take the coverage based on that one, I'm going to pay my premium. So let's say it will be again 50,000 or maybe 1 lakh or maybe beyond that. Now this 50,000 or maybe the 1 lakh or maybe the 5 lakhs, what exactly I'm going to pay today at age of 30. So till even another 20 years, till even another 30 years, what exactly I'm going to take the coverage even for during this term, I'm going to pay the same amount throughout my term. And that benefit you are going to get only in your life insurance policy. And that is the beauty, and that is the uh, well designed product for each and every even life insurance companies. Now, if you compare, why I'm telling this is such a beautiful even product as well as the design even such a way. Because if you go for, let's say, we have discussed even a lot of couple of other even financial products, or maybe if I compare, let's say, with any of your loan, let's say typically a home loan. So that actually depends based on again on your age. So age is less, definitely it will be your per lakh EMI, it will be a little bit less. Again, if I go for, let's say, a little bit higher age, so definitely it will be changed. So what I mean to say, only life insurance, the age of 30, what exactly you are going to pay, 40, 50, even whatever 20 years, you're going to pay the same amount. But whereas if I take, let's say, a home loan, even though if I apply at age of 30, so I'm going to pay even a different MI. If I'm going to take even the same, even let's say home loan, let's say at age of 40 or maybe at age of 50, so I'm going to pay a different EMI. So I'm not going to discuss on home loan over here, that already you have discussed. You can go back to my home loan series and just you can get a lot of ideas over there. But here, now, the increasing or decreasing of your coverage, typically what you call it is sum assured. So sum assured, what is sum assured? Already you have discussed in my sum assured video. You can go and you can just check it out, then you can come back and watch this video. Now, so paying, let's say at age of 30, if I'm going to cover myself, I'm going to pay, let's say, X amount, or let's say a 50,000, let's say a 1 lakh, or let's say even a 5 lakhs. Till my 20 years, till my 30 years, I'm going to pay the same amount. But the changes, the beauty over here, what exactly I have just now told, as per the product, because different company, different when products are available. But yes, it is designed, it is also available, maybe XYZ company or maybe XYZ product itself. That as per my age, that sum assured, that coverage, like coverage, may increase also. Even it can be even reverse way also. It can be even decreased also. So I'm just giving again a simple example. So today, let's say age of 30, let's say I'm going to take a coverage of 1 CR, right? For that, against of that, I'm going to pay the premium. That is, let's say around 50,000. This is an example I'm just going to take. Or maybe let's say 1 lakh. Or maybe let's say 5 lakhs. So let's say I'm just going to take an example of 1 lakh. So 1 crore is my coverage. 1 lakh I'm going to pay for, let's say, another 30 years. So entire 30 years I'm going to pay, let's say, this 1 lakh, but maybe after 10 years or maybe after 5 years or maybe as per the policy designed, my 1 crore maybe even 1.5 or maybe even it is 2 crores also. I'm just giving an example. I'm not here to promote any kind of products, any kind of service, any kind of other things. It is all with my 19 years experience. I'm just going to share over here, right? So there are even products designed in such a way that you can get of your increasing coverage. Now, when I'm talking this increasing of your coverage, so one way you are actually getting benefited. Why? Because I'm not going to pay any extra amount for this. As I told you, a simple comparison with home loan. So I'm not going to pay any extra amount, but I'm going to get even an extra coverage. That is point number one, benefit. Point number two benefit is tomorrow, let's say, as for the inflation, typically, if I look out as for the inflation, and let's say any unforeseen event happens, right? So, what I'm going to get in spite of 1 year, I'm going to get a little bit more, a little bit extra. So, that is going to help my family. That is going to again cover up some of the financial losses also. So, that is also another benefit. So, if you look out, yes, you are going to beat the inflation, paying the same amount, getting different coverage, and beating the inflation. And finally, for that, even you no need to even give any kind of proof or let's say any kind of let's say intimation to the insurance company, because this is, as I told you, the product itself even designed in such a way based on this product benefit, based on this effect of the product, you are going to get this coverage additionally even year on year, right? So I think this is very very important. So again, somebody is looking, let's say, any kind of policy, or let's say somebody is already in touch with some kind of financial advisor or any kind of financial planner, so they can approach even to their financial uh, planner or maybe the financial advisor. If you have such kind of a product, if you have such kind of a plans, please you tell me, so that the benefit of this, if you have watched this video, if you have understood this video, you, I think definitely it would be a most choiceable product, choiceable event coverage for you, right? Thanks for watching.